Guys, give me 1 second. 1 second, guys. I'm here. Hello, traders. What's going on? Hello, hello, hello. Hope everyone had a great long weekend and are enjoying their weekend. And thank you for joining me on your day off. I was going to do this tomorrow, guys, but I have a family dinner. I just got back from Montreal, and my wife would have probably left me if I missed that dinner tomorrow. But yeah, guys, so today we're going to go over key levels. I realize it's so hard playing day to day, and there's still a lot of questions. So I really wanted to go over the key levels. I wanted to go over how to make the key levels, what contracts to buy with those key levels, and how to eliminate the most risk playing at key levels. Because as you guys will know, not every trade is different. Every single trade is different. You're going to have trades that you'll have, like, if it makes a new high, I'm out, right? And then you're also going to have trades where it's going to, like, go way against you, and you're just going to add in because you're going to have full conviction. You're going to understand the play. So this is why I wanted to, this is what I want to go over today, how I personally trade when it comes to the key levels, okay? But just remember, every trade, guys, is different. Every trade. You're going to have different stop losses on any trade. Even though you have a strategy and you back tested that strategy, stop losses are something that you're just going to know. Okay? You're just going to know. The more you trade, you're going to know your stop loss. You're going to let other trades pan out, and some of them you're just going to let go early or where you say you're going to stop out at. Because no two trades are the same for the most part. So let me look who's in this chat right now. How many people we got? We got 42 people here. Holy shit. Let's go. Well, thank you guys. I appreciate it. Honestly. Usually we don't have too many people pop up, but we got the key levels, so we have to go over them. Let's get started here, ladies and gentlemen. Okay, so listen up. Key levels, and a lot of you are going to... I repeat myself a lot, and a lot of you guys have heard this before, but I'm just going to start from scratch. We have some new people, some people who don't understand. I'm just going to take my time, go slow, and explain everything. When I'm doing a key level, guys, I do them on 4 time frames. Usually 3, but like I'll add the 4 hour, okay? So I do supports and resistances on the 5-minute chart, and it's pretty much just to where I can zoom back, right, on Webull. So say this is the intraday, I'll zoom out, and it's usually around 3 to 4 to 5 days, okay? I'll use the 5-minute chart to add my key levels, my supports and resistances, okay? I'll go to my 30-minute time frame, and I'll add my support and resistances throughout for like the last month or the last 2-3 weeks, okay? And then I'll hit the daily time frame, and I will add my supports, resistances throughout the entire chart. Okay? When it comes down to contracts, listen to me closely. The higher in time frame you go is the safer contracts you get, because it's the longer the plays in a play out. So if you're sniping a support, right? Like let's say I made a support right here at 440, right? 440.80. If I bought calls, so if I keep a line right here at 440.80, 440.81 if you're looking at my screen. I'm using this as an example. Okay. So say I wanted to buy calls at 448 or 440.81 support. Do you see how far past it went beneath that line? It went down almost a full dollar, almost 1 full point. It went beneath my key level. But look how it ended. Extremely bullish. It ripped like 3 points. So whether you're playing the 5-minute, the 30-minute, or the daily chart, if the candle closes, if you want calls, and the candle wick sorry, I don't know, my fucking mic just cut out. The candle wick right here, you see how the candle closed above the key level? Okay, so just imagine this was the 5-minute chart. You see how at the end of the day, it closed above it, which made it look like we broke through our key level, we came back down, we retested it, and we ran the next day. Okay? This play, it went an entire point away from us, but it still acted as a support on the daily time frame. So when it comes down to playing or making key levels, the safer the contract is usually the higher the time frame, because you need to give it time. You don't know what the candles are going to do. At one point, this candle right here was a deep red, right? And it probably looked bearish as hell. But look how it ended. And this is how exactly we play the 5-minute chart. Okay? If I'm making a key level on the daily time frame, I'm probably going to go a week to 2 weeks out. Because you got to give it time. Because look where this candle closed. At one point, it was at 439.90s, right? And look where it closed at 442.88. That's almost a 3-point move if you bought your key level. Yes, it went against you, but look where it ended. When you go to the 30-minute time frame, it's a lot different. It's the exact same thing, but you can get a little bit riskier contracts, right? You can go 5 days out, 4 days out, right? You can let the play develop. On the 5-minute chart, when you're confident, you can hit same days and next day expiry. So listen to what I'm going to say. I heard a quote that it stuck with me heavily, okay? At the start of a new adventure, I'm going to butcher this like a mofo, okay? But, okay, so the least amount of money you have, you take more risk with lighter size. The more money you have, you take less risk, but with bigger size. Okay, so if you have a small account, okay, and you want to play same days or next day, you use a very, very small position size for your account. Okay, so you take high risk, but small risk at the same time. Okay, so you're only using a portion of your portfolio, a very, very small portion of your portfolio in a high risk play. The more money you have, the bigger your account is, you hit the big play with extremely safe contracts. And that just goes for trading in general. Okay, so there's 2 ways to do it. If you have a small account, of course you have to take higher risk. Okay, but you only use a little bit. The bigger your account is, you can hit it heavy with size, but very, very safe contracts. And that brings me to my next point of when to be able to find out if a play is going to go for you or against you and what contracts to buy at a key level. When we are making key levels on the 5-minute time frame, like I said, we're going like 3 days out, okay? So for instance, right here, just say this is SPY's chart. I'm going to make some key levels for us right now. This is exactly how I make my key levels, guys. This, like, just looking at the chart, this is what I'm going to do. I have a clear chart to work with, right? So I'm going to look at the high of the day on this. I'm just going to put a line here, right? I'm going to look at the wicks. Support, support, support. Broke through, support, 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 support. Acted as resistance, big sell-off, right? So at the double top on the day, the area that I'm looking at, right? I'm only looking at 3 days. I decided to put a line at the double top. I'm going to follow that double top. I'm looking at all these touch points. The supports, the rejections. The supports, the rejections, okay? I'm going to carry that away. Support, ran, rejection, dumped. Hit it again, rejection, dumped, okay? So this is the 5-minute time frame. So I already have one line right here, okay? And it was easy. I just went off the high of the day, double top of the first day, okay? What else catches my attention? I'm going to go the low of the day on Tuesday. And by the way, I'm making this for Tuesday's open, okay? So I'm going to put the low of the day just because it looked like a support area, okay? The low of the day, everything was closed above, closed above, closed above. So now I have 2 key levels in the last 3 days, okay? I have the high of one day. I have the low of the previous day, okay? And now I'm going to start zooming in a little more. I'm going to look for the big micro, very, very micro key supports and resistances, okay? I'm going to look the first day. I'm going to go, so if I'm only looking at 3 days, guys, I'm going to go to the first day. I'm going to make it big. Okay, I'm going to add some lines here. I'll grab a line, and I'll just move my mouse around. So I'm looking right now for the wicks, okay? I'm looking for candle closes, candle opens, and wicks that all line up. You see how these 2 candles right here, they close at the exact same? So I'm going to add a line here, okay? The reason why I put it here, 2 candles closed here is a rejection, right? And we broke through it, we came back up, rejection. So I'm just going to follow this around. Go back of the day, rejection, rejection, support, support, rejection, support, rejection, rejection, double rejection, okay? This is just off of the first day, right? I'm only playing, we're making micro key levels right now in the 5-minute time frame. And so I chose to use the first day because we're in, not all times will work like this, but we're in a range right now, right? So in this range, I'm going to start with the first day. I'm going to work my way to the end. So right here, this level, 451.35. I guarantee that's probably one of my key levels or very close to it. So as soon as I put this key level, so what made me identify this, right? As I just looked at the resistance, right? I saw a bunch of wicks here, but I saw a bunch of wicks here in the pre-market and in the morning. And then I saw 2 candles close side by side. The same, right? Open and close. So I just put a line here for the hell of it. I'm looking across. So this so 451.35 for this exact day was a big resistance, okay? So now I'm going to go over to the next day because we're only looking at 3 days at the moment. Some days it may be 5 days if it's in the same range. It's okay. And I'm looking to see how this level is being respected, okay? So the pre-market, we touched it, came back down to it, bounced. Touched it again, bounce. Broke through it, came back up, retested, big sell-off. Okay, so far, this key level is working for the day, the next day. Resistance, 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 and support, support, support. Okay, now we're going to the final day. How is this line being respected? Every time we touched it, big bounce, big bounce, big bounce, big bounce, right? Or a decent sized bounce. As soon as we rejected it, we fucking fell off a cliff. As soon as we rejected it, we fell off a cliff. Okay? So right now, in these 3 days, I already have 3 key levels on SPY. you can make more. You can analyze a chart more. Like I could, like what? You see, I'm just showing you guys what to look at. You see these 2 double candles right here? I'll be like, I see wicks. I'm just going to add one here for the hell of it. And then I'm going to follow this line around. Rejection. So it was a previous support, then a rejection. Previous support, and it ran. I'm going to follow this all the way through. I'm looking for the touch points of the wicks. And the candle is closed above or under it. Right? So I just made another key level for you guys. Just like that. And the way you put, well, as soon as you put that line on it, you're able to see all the wicks. You see how everything's just lining up now? People think key levels are so difficult to make. They're very, very easy to make. I'm doing all this in front of you guys in real time, and I'm showing you how I find them, right? When I looked over here, the reason why I added a key level here, because I just zoomed out, and I'm like, okay, let me take a drop. I just want to see how good this key level is. And sometimes you'll do this, and you'll look at the other days, and it won't work, so you don't add it. I saw 2 candles close here and a wick here, so I'm like, okay, let's put a candle here. Let's see how it looks. Oh, we used it as support and we ran. I back test it. I look at the previous day. Support all day. Support. As soon as it rejected, it was a big sell-off. As soon as it was support, it was a decent-sized rib. Okay? And we look at the previous day. It's still respecting it. So these 4 levels I just made in front of you guys, I guarantee that they're like identical to the ones I have, because this is exactly how I make them. Okay, hold on. Yeah, probably. I think some people would be able to see better without the EMAs. Okay, brother. My bad. Yeah, I guess it does look too much. Sorry. Edit indicator. Oh, just do it right here. EMA MAV what? Thanks for that. Yeah, probably. I didn't notice that. Wow, so much better. Thanks for that, bro. I appreciate that. Okay, so far, for Tuesday, we have 4 key levels that I made in front of you guys. So everyone that's watching right now, are we on the same page? Are you guys starting to understand? Because sometimes, like, I know what I'm doing, so I think that you guys should all understand, but I may not clarify it. So let me know if you guys are understanding how I'm making these. Okay, good. So, and if you don't, just speak up if you don't, okay? So these 4 key levels right here, add them to your chart right now, guys. Like, these are going to be respected like crazy on Friday. But the same way, guys, I made these key levels. I'm going to go to the 30-minute time frame next, okay? So just say, this is me on Tuesday morning, okay? This is the chart I have Tuesday morning. This is exactly what I'm doing to start my day and adding a previous close. Okay? So the previous close, I'll add it for you guys right now. I just want you to see how I'm doing these every single day and how I start my mornings off. So it was 450.92 we closed, okay? 450.92. Just put it at 93. And I always make my previous close different so we know that it's a previous close, okay? I make it a red line. So Tuesday morning, this is me at 8 in the morning, okay? Or whenever I wake up. So I got my levels down, okay? I'm going to go to the 30-minute time frame. The way we just did this is the exact same on every time frame, okay? You're doing the same thing on every single time frame. So now I'm going to go to the 30-minute, okay? And I'm going to see, I'm back testing these key levels right now, okay? So now we're on a bigger, wider time frame. Look at all these fucking key levels, guys. Work amazing key levels, right? You see how they all line up on the 30-minute too? But this is how you back test them, because you're making sure that, okay, on the 5-minute, these are a good snipe, right? I can use riskier contracts because I have the previous 3 days showing me that these levels I'm making on the 5-minute time frame are big supports or resistances, okay? And you can even make them different colors. So put the 5-minute, well, okay, I'll do the 5-minute yellow or orange, okay? So 5-minute orange. I'm just doing this to show you guys, because you can do that. I don't do this because I just make my key levels big or small. Like I'll go to, like, say this key level, if I see a lot of support and resistance, I'll just make it a massive key level. So when I see a bigger, thicker line, I know it's like to play it more safe. So I'm going to take my key levels from the 5 minute. Sorry guys, I'm still a little sick. So from the 5 minute, so we made them on here. Okay, we're going to zoom out. We made our key levels. Now we're going to go back test them on the 30 minute to see which ones are the strongest or the weakest. We're pretty much looking for strength because we only want to buy in at the best price at the best price at the. Oh, I don't even know what the hell I'm trying to say. The best entry at the best price. Okay. So we're gonna back test these right now. So just, one sec. Yes. So when you're validating them on the larger time frames, you're gonna notice some of them respect the wicks more than the other ones, and that's when those are the ones that you put most attention to, and you would make that line look different, so it means more. Okay, so like 450.37 looks like a massive support area, right? This is how I'm seeing it, massive support area. So I'll make that just in the micro, so I'll make this a little bit bigger just to be like, okay, when it comes down here, I'm gonna hit calls, because we have it's proven every time we use this line as a support, we run. Support, we bounce. Support, bounce. Okay? And 450.61, we touch it, reject. Touch it, reject. Touch it, reject. Touch it, reject. So when we come to this line, 451.65, we already have the chart in front of us. And before I get to the next point, we're just going to go back, right? So I made these on the 5 minute time frame, guys. So now I'm on the 30 minute. I check to see which ones are good. And these are actually all nice. They're all respected. So I like them, okay? So I'm going to zoom out, and I'm going to go back on the 30 minute time frame. I'm going to see which are the best ones to use, okay? So now we're around August, the beginning of August. Oh, look, 461.65. Touch it, massive rejection. Reject it, massive rejection. Okay? Touch it again, massive rejection. 451.65. So right now, 461.65, I'm going to make that line look even more different. I'm going to try to make it as big as it goes, or I'm going to put it as like red. I'll put it red. Okay? So I know that this, on the higher time frames, this is showing me big downside potential. And once it becomes a support, and we're going to find it support right here. Support, massive upside potential. We touch it, massive upside potential. We use it as support, massive upside potential. So this line, 451.65, is a massive key level, because if it acts as a support on the 30 minute time frame, we're going to fucking hit calls. And if it rejects, the candle rejects on the 30 minute time frame, we're going to hit puts. Why? Because the chart is showing us all the way back until July that this level, once we reached it, was a big sell-off. We came up to it, big sell-off. We use it as support, massive rip. We use it as support, massive rip. We use it as rejection, big sell-off, okay? So I like to make lines in the higher time frames, and then I change them. I'll put like a big red line, so I know, I know if we're coming up to it, that's my level for puts. That's a big level. That's like, this is like when I say cash account, small accounts, 451.65, that's the spot. Okay, and then I'm going to take it to the daily time frame. Just to see, right? I'm just making sure that how these work, okay? And look at this shit. We used it as support, we ran, we rejected it, big sell-off. Rejected it, big sell-off. Use it as support right now. Right now we use it as support, so we could probably bounce. But I'm just I'm confirming the lines I make. And pause. You can also do this in the inverted way. Okay? So usually, okay, hold on. I'm just going to read a comment quick. Okay, easy shmoney. I was just explaining how I'm making micro into the macro, right? What you can do, guys, is I would recommend you start off on the higher time frame, okay? So go to the daily. It depends what type of trader you are, right? I'm a sniper, but my strategy works on every single time frame. It's just the longer you have to hold, okay? Because a chart is a chart. A support is a support, and a resistance is a resistance, and a wick is a wick, okay? So I can literally play my strategy swinging off these key levels. My key level was a support, and we fucking ran. My level was a resistance, and we fucking sold off. Every time we touched it, sold off, okay? And now it's holding us as support right now. So the way I just showed you to make those key levels, I highly recommend that you start on the daily and then work your way down, okay? Just so you know. But I don't like keeping all these levels on my chart. I actually have a notepad, and I just write them all down. So every morning, I like to start with a fresh slate. So now we know for Monday, I'm just adding this to my notes. Give me 1 sec. What's this key level? The key level is 1. See, look it. The key level I made in front of you guys is 451.65. And my key level is 451.73. Okay, 8 cents off. So I'm going to do a slash, and I'm going to do 451.65. Okay? I just added that to my screen. You could back text them either way, exactly. And you're going to notice that when you start on the daily, to the key levels, okay? So they're going to be the macro key levels. You're only going to be able to get like 2 or 3 of them in looking at the daily, right? And then once you go to the 30, it's going to be like 2 weeks out, and you're going to be like, oh shit, I can put a lot more in here, right? And then you're going to go to the 5 minute, and you're like, holy shit, I can put a ton more in here. A ton more key levels. And you'll notice, though, on the 5 minute time frame, when it gets to a macro key level, it's going to take time for the most part for it to reject. That's why I always do a starter position, guys, because there is something called fuckery, and it happens very, very often. You have to be very, very careful of it, okay? We don't know when it's going to happen. We just got to plan for it to happen. We got to plan, what if I get squeezed right now? Or what if this thing can continue selling off? It's all about the plan for the execution. Sorry, I need to take a drink. My throat's sore, sorry. So the way I just showed you, are you guys following me right now? How many people we got? Okay, we got quite a bit. And if you're not following me, I want to hear from you. If you are following me, like, I get it. If there's something that's not clear, tell me, because I'll try to go in more detail. As long as you guys understand this. So the key levels. I just showed you guys how to make key levels very easily. I showed you on the 5 minute, the 30 minute, and then the daily, okay? And you're going to realize the lines that we didn't intraday 3 days lines, okay? I don't know what the hell I just said. We made 4, how many make? 1, 2, we made 4 key levels on the 5 minute time frame. Look it on the daily, guys. Okay, so you see how on the daily some of them don't respect it? There's big key levels and there's small key levels no matter what. Okay, so right now, so 450.37 is the key level. And this is where I'm getting into my next topic. This is the key level, right, guys? We buy in at our key level. Say we wanted to buy calls. We buy at our key level. Look where this went to, guys. This went down almost 50 cents. Okay? Say we wanted to buy puts at our key level, 451.65. Look where this went. 452.88 before breaking down, right? Look where this one went. 452.88. Oh, it was a double top. Not all trades work the same. This key level at 451.65, it ripped all the way to almost 453, guys. And on the 5-minute time frame, it probably looks so fucking bullish. Look how it ended. Look how it ended. It's a rejection. It's a rejection sell-off. We broke through it. We still sold off. When you are playing the higher time frame micro, you have to be prepared, especially when you're playing the daily. You have to be prepared that, okay, this could go down like $1 a point against me. It's very possible this can go a point against me. But that's when you're playing for the bigger win. And if you look at like, okay, this is a perfect example. Exactly. This is why I double down, guys. There's a reason to my craziness. There's a reason to my madness. And there's a lot of traders that don't agree with how I trade. And it's understandable. Everyone has their own strategy. I was in a small account, guys, and this is just what worked for me. You're going to find a lot of strategies that work out there. I'm explaining what it took my account to go from 4 figures to 7 figures in 3 years. Okay? Because remember, every trade's not the same. Now look on the daily, right? You see how we made this line at 451.65 on the 5-minute time frame? Look when we touched it back in July. We just touched it and bounced. We came down, we just touched it and then bounced. And then look for the rejection. It went over a full point away again from our line. So if you were playing this works on, like, just imagine this is the 5-minute time frame, okay? When you're playing the daily, like, think about as if you're playing the 5-minute time frame. So if you're playing the daily, play the daily. Like, watch the daily chart, watch the daily candle. If I would have bought puts right here at 451.65, it went $1 against me. Okay? So when you're playing the higher time frames, it's always better to wait for the overreaction first so you get a better price, and then you'll be able to know to get in or get out. Yeah, rewatch it. And if you have any questions, guys, remember, I'm not like, I didn't go to school to be a teacher. I'm just, I make notes of how I trade, and I just try to tell you guys how exactly I come up with all of these key levels. But as you would just see right here, you see how this key level, how far it went, like $2 away, and then tank, and then another key level, it touched it and bounced immediately. This is SPY, guys. Sometimes you're gonna bottom ticket. We're gonna buy our key level, and our 25% position is just gonna run for us, okay? And then there's gonna be cases like this where we buy at our key level, and we're gonna have to double down once it goes against us. And then guess what? We have the amazing play. Every play is different. This is why sizing in has just saved me immensely. Let me look at that, Smerlin. Give me 1 sec, buddy. Oh, you wrote it right there. Smerlin says, when you draw key levels, do you draw it at the body or at the end of the wick? It all depends, right? Put one on both, okay? Put one on the top and the bottom and look where it respects the most, because you're going to find wherever you do that, if you zoom out, you're going to see a lot of other candles, bodies closing at that line or opening at that line. It's not one way to make key levels. It's just like, I can't just tell you how to make a key level and show you once, because it's never the same. So if you're unsure, don't be scared to add a bunch of lines on your screens, guys, and find out which one respects it the most. How many touch points are here? How many closes or openings happens on this line? How far above that key level did it go? Okay, and that all helps you for entering your next trade. If you put a line on the daily at 451.65 and you're like, where can this go? It's at 452.88, right? Approximately. So you're going to know when we get here, when we get to our key level to short, we know that it could potentially go up $1, $1.50 against us. So we may just wait a little bit, right? There's no pressure. There's like, you don't need to just sit there, and you don't have to buy exactly the key level. Where you're making that key level, you use the history that SPY gives you for your entry. So every time we touch this, every time we broke above it, we came back down, we bounce. We broke above it, we came back. Every time we came back down to 461.65 was an immediate bounce, right? Every time we rejected that level, it overthrew it immensely before tanking. This one, it hit it immediately and tanked. This one overthrew it before tanking. Okay? There's nothing, no one can give you like a recipe of how to make a key level one way. It's you have to experiment. Look at the 5-minute chart on one day and add like 7 lines there. And then zoom out and look at the ones that make the most supports or the most resistances. And then bring that to the 30-minute time frame. And then bring it to the daily time frame. Okay? Key levels are very easy to make, but what you got to understand, like imagine this was the 5-minute time frame, and I'm like, guys, I'm buying puts, small accounts, cash accounts, I'm buying puts at 451.65, right? Because it was a previous floor right here. I'm looking for it to turn into resistance. Okay, it shut up over a point away, but look how it ended. This is why we size in. We do a little bit starter position. Okay, and then we will add, you can even make another key level for your add-in. When you double down, you can make another level. And sometimes for the daily it doesn't work, but if we did the 30-minute time frame and zoomed out, you can add a line at 451.89. Okay, because I saw, where did I find that? 451.89. Okay, because I saw this candle close here and this candle bounce, so I just put a line here to look. Rejection, rejection. Support, 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 rejection. Okay, so if we were buying at 451.80, 451.65, we did a starter position. When I say, guys, starter position on calls or on puts at 461.85, we're going to do a starter. And our double down is 451.90. Why is it 451.90? We just made it on the 30-minute time frame. We know there's big wicks, okay? Massive supports and rejections on the 30-minute time frame. Massive rejections. Let's put that on the 5-minute. How well does 451.90 react to SPY? We used it as support. We rejected it. Big downfall. We used it as support. Big up. Big upside, big upside. All a pre-market. We use it as upside. Use the pre-market, guys. Use all of these levels, or when you're doing key levels, and add them to the key market too. See what is working. See where the resistance and the support is. And like I said, no play is ever the same. Some plays, like guys, okay, so just say this, okay? Say I wanted to buy calls at 451.65. I'm just using the same numbers just so you guys understand. So we're trading right here, and I'm telling my Discord, guys, 451.65 is the level for cash accounts, small accounts. That's the best level. Okay, this is the best level. So let's go. So now we're in it, right? This level right here, 461.65. Look how far. So say I say, guys, okay, I'm entering calls as soon as it hits 461.65. I buy in right here. Look where this went to. It went all the way to 451.16. It went down almost 50 cents, a half a point, before bouncing. You need to have conviction in your plays. That's why the safer contracts, the better hold. Because you need to wait for that candle to finish. You need to wait for that candle to finish to have the confirmation. When you're playing the daily time frame, you have to wait till the end of the day. The 30-minute, you got to wait 30 minutes. And for the 5 minutes, you have to wait 5 minutes. You have to wait for the candle to finish. Is the candle closing above my key level, or is it closing beneath my key level? Is there any questions so far, guys? Remember, it's a lot of information I'm giving you guys. If I'm struggling, remember, I'm not a teacher. If there's a better way I can explain it, I'm going to help you guys. Just say Top G or Top Sniper or Steven, I don't understand. Can you go back to this? I'll help you. Okay, good. Let me look at these questions. Yes, you draw using rectangles. Do you look at the trend breaks? And yes, Ralph, you can 100% add uptrends and downtrend lines to the 30-minute to the daily time frame. All right, it's usually free money. Okay. If we've been on an uptrend since August 11th, okay. Sorry, don't mind this one. August 11th. I'm just saying hypothetically, guys. Okay, we've been following it. We came down, we hit it. We came down, we hit it. We came back down, we broke above it or beneath it. And we came back up, we retested it, and look at the sell-off. 100% uptrend and downtrend lines on the higher time frames. 1,000% put on your charts. 1,000%. Say that again. Easy shmoney. Give me 1 second, guys. Confirmation, guys. So the confirmation is if you have a line, a key level. Say, use this candle for instance, okay? So this is our support, 440.81. You see how at one point this was a big red candle, guys, right? It looked very, very bearish. Look how it closed. The candle closed above the line, which makes it a support because there's a wick at 440.81. This is a support. We do not short. Okay, and look where the next candle went. It went a lot higher. As soon as we dip down, look where it went. We wait for that candle to close. Whether you put it on the 5:30 or 4 hour or daily, you need the confirmation. Is it a support or is it a rejection? Okay, Freddie, when it comes down, there's two options when it comes down to sizing in, guys. You could be the guy or the woman who puts a 50% position in and then doubles down 50% position. Or you could be the person who puts a 25% position in, doubles down to 50%, and doubles that down to 100%. It all depends on the type of trader you are. Okay? And this comes from journaling. So when you're journaling your trades, are you usually adding in once, doubling down just once and letting a half a position ride? Or do you find yourself taking the 3 double downs? This comes from journaling. That's why I tell you guys I would love for you guys to journal your trades so you can actually visually see how your trades are going. I don't add every 10 cents. It's minimum 10 cents, right? So if something's like dumping or going against me, just because it's like if I see 10 cents, I'm not just adding. I'll like wait for the candle to finish or look for the next key level is. The issue with 363 is you're not bringing your cost average down with you. If you did 3612, you're bringing your cost average down immensely. 3612 is the way to go. Yeah, just like Gecko said. Okay, because the reason why, guys, we keep doubling the position size down is because we're actually taking a dent in our average cost because we're doubling down. Okay, so if we buy in at $2 and it goes to $1.90 and we double down, our average cost is now $1.95 instead of $2. And then once our contracts go back up to $1.95, we can sell break even for 5 cents under what we bought in at. And you could sell for a profit for the price you originally bought. This is why sizing in is key, man. I love sizing in. It just works for me. I don't know about you guys or a lot of other traders, but I don't like going down deep red. I don't want to be in with 100 contracts and down $2,000 and not knowing if it's going to go in my direction. I'd rather start off with 25 contracts, double down to 50 and be down like $1,000 and then be like, should I double down right now, put a full size position, or should I just take an L? That's how I trade, and that's what works for me, and that's what works for a lot of people is sizing in. And you guys, you will know if a play is going against you. People's like, how do I know when to cut it? That gut feeling that you have to cut it, you just cut it. If you have a gut feeling to say, get the fuck out, just get out, okay? But always go in. If you're buying in, like I say, if you're buying in 10 contracts, guys, your max risk is $200. So if you buy 3 contracts and it goes down 10 cents, you double down to 6, that goes down 10 cents, you're only down $90. And you're down 20 cents from your original entry, right? So instead of it being 200, you're only down 90. So you'll be able to know at the 90s, at being down after 20 cents goes against you, you're going to know like I'm only down 90% or $90. Should I double this down and go higher, or is it going against me? You don't always got to take your loss to the max loss. You don't need to take it to max risk, max loss, a trade. You will be able to know if something's going to go with you or against you or without you or for you. Yeah, exactly, Willis. That's the thing. Me too. Sometimes I add twice, right? I don't usually get the third ad, but if I do get the third ad, then I will. But it's usually 2 ads, guys. And you don't just buy just because you're 10 cents down. You're playing the price action. Is the move look extremely bullish or bearish? Should you wait for a big overreaction to either side? Let me just look quick, guys. And when it comes down to eliminating risk, right? That's where it comes. When it comes to eliminating risk, we're sizing in where we're supposed to. We know where it can potentially go to because we're watching the chart. All of our trades are pre-planned. We know where we're buying. We know where we're selling for a profit. We know where we're getting stopped out before we get into the trade. We're not making this like in real time. It's pre-planned. Take the hard work out of it. Let your due diligence play out for you. I'm buying in here, I'm selling for profit here, and I'm stopping out here. If I'm buying in at my key level, where could it potentially go to for the double down? Or should I even buy my key level because I see 3 wicks that go at least 50 cents over? So I'm going to buy 50 cents over my key level. And yeah, 248, guys, it doesn't matter what it is. It could be 124, it could be 248, whatever you feel confident with, okay? It's just like being a doctor or a lawyer. You got to put your time in, okay? You got to do the back end work. You got to study. You got to understand how price action works. You got to understand what company you're playing. How does that company usually trade? What usually happens in overreactions? What usually happens on low volume? It's a bunch of things, right? But I think I've covered most of it. No one seems to be lost. Everyone's starting to understand my key level process. So that's probably going to be it for today. If you have any questions, shoot them immediately. And guys, this is going to help your trading immensely, okay? Like, this is why when you see people in the chat and they're like buying in on this candle right here, but you know it can go down, it's going to save you money. Just because other people are buying in, you got to look at the best setup at the best price. Where am I going to buy in for the best opportunity of a bounce or a massive rejection? And that's how we play day to day. That's it. I don't play shapes. I don't do anything else. I don't care who's buying in what. Every moderator could be in a play, and if I don't like it, I'm just not being it. If it doesn't hit my level, I'm not entering it. When it comes to futures trading, that's on a hold, guys. That's on the hold from the higher ups. Pretty much, when it comes to futures and those funded accounts, William doesn't want any of us, like anyone in general, to recommend accounts that could potentially be like a fraud, right? He doesn't want to make his company look bad until we put in more due diligence and look at the companies properly and understand exactly what we're getting into, so we can teach it the exact way what we're getting into. So for now, we're not doing futures because William doesn't want to jeopardize his an outlook on his company, right? We don't want to provide future, like in hindsight, it looks like it'd be wicked, a great opportunity. I'm like for it. But I understand Will's concerns about it, and it makes sense. I don't want to tell you guys, go buy Ninja or whatever the hell they're called, and then go bankrupt. You guys lose your money, right? We don't want to be putting that type of information out there that we're not certain about. So the only way we will get futures is with the more information we have, and we are currently doing our own due diligence to see what the best option is for that, because I know a lot of people like doing that, but also if it's a scam or whatnot, whatever it is, we can't have the Trader Society held accountable for telling people to trade a certain type of account, right? It all comes down, and that went over my head. I apologize. I didn't think about it like that. I was actually excited to do it, but it makes sense, guys, and you live and you learn. So hopefully in the future, if we can start doing that. But my opinion would be for everyone in here to do their full due diligence on buying a funded account. Their full due diligence before entering, okay? I don't know anything about it. I can't tell anyone anything. And for right now, I had someone coming in, and it's just not the right time. Will doesn't want to do it without the proper information, and we don't have the proper information right now, so that has to be laid to rest at the moment. So I apologize. But if you are already in a funded account, you can trade SPY with it, right? So it shouldn't, the plays that we're entering, you'll be able to make money off of regardless. Whatever you feel like doing, that's you're able to still trade SPY with a funded account, from what I heard. I'm not telling you to buy one. I don't know anything about them. Do your own due diligence. I trade with real money. I've only ever traded with real money. I've never paper traded or used a funded account. So just know that. But okay, guys, I'm going to get going right now. I'm going to go eat dinner. My throat is so freaking sore right now. I haven't talked this much in a while. But thanks for tuning in, guys. I appreciate your support, honestly. Like, the community we have here is phenomenal, and I appreciate every single one of you guys. We have something good going on, man. I love providing education. I love the people in here that want to continue to learn and people that want to continue to help others. It's very, very great, and I like it. And if you are not a member of Trader Society, guys, Trader Society will be opening up within the next couple days. And that is where you'll be able to trade with the most elite traders that we have. Okay. This Discord is mainly for learning, scalping, and getting the ropes before joining into Trader Society. So I'm going to leave it as that. Thank you guys for joining me on your Sunday. Go enjoy time with your family. I'm going to get going, and I'll see you guys Tuesday morning. Take care.